Excellencies, distinguished delegates, ladies and gentlemen, good morning. It is a great honor of mine to address you today, and I wish to extend my sincere appreciation to NJ, Africa Energy Chamber as host, and Energy Capital and Power for their invitation and warm hospitality. I speak on behalf of the Gas Exporting Countries Forum, an intergovernmental organization of 20 member countries, including 9 from Africa. As of today, together, they hold 70% of global proven natural gas reserves and account for 40% of marketed production and exports. So, as you can expect, my focus this morning will be on gas. The global energy landscape faces a significant challenge as market dynamics respond to the ongoing geopolitical conflict in the Middle East. The current energy crisis touches every corner of the globe, from the industrial hubs of Europe to the emerging economies of the global South. Supply disruptions, and NJ talked about the Strait of Hormuz, threats to critical energy infrastructure. We've seen what has taken place in Ras Laffan in Qatar, but also to oil facilities in Kuwait and Saudi Arabia. The desperate measures that we're also seeing in response to this conflict is part of the problem itself. And I'll speak a bit more about this. Because we are also seeing a response that is sometimes knee-jerk, but could have implications more wider globally and affecting other countries that may not be directly involved. In fact, when you look at Africa as a continent, the implications for it coming out of this conflict are more indirect than direct. It's not so much a direct supply of either oil or gas, from the Gulf countries that is the problem. It's often the indirect implications on price, on the implications for supply chains in general, on fertilizer availability, and so on and so forth. And so, it is therefore a time that we need to reflect on energy security, which in my mind has very quickly come to the forefront as national security. And that is what is driving some of the behaviors that we're also seeing. And therefore, when we talk about energy security, we are talking fundamentally about the very core of what governments and nations hold dear. Crucially, these developments have impacted gas markets across both the short and the medium term. In the short term, conflict escalation has created a systemic shock driven by disruptions to commercial shipping, stopping shipments of LNG from Qatar and the UAE, and damage to strategic infrastructure. Ras Laffan is actually the biggest single liquefaction hub in the world. These effects have triggered a massive spike in price, returning the market to high volatility levels that were seen in previous crises, such as in 2022. And consequently, these disruptions have shifted the global focus toward immediate energy security, as supply gaps have become the primary concern for natural gas importers. Natural gas demand destruction, with coal switching and renewables acceleration, is an example of the knee-jerk reaction that could become systemic if the crisis is prolonged. I just want to say a little bit about the responses that we're getting. So in my view, there are probably There are many, but three principal things that will determine the implications of this crisis. The first is the severity of the damage that's caused. Let's call it damage, right? Whether it is in terms of closure of the Strait of Hormuz, which has already happened and has been sustained, but the Bab el-Mandeb, is that going to remain open? And therefore, does that then affect flows through the Suez Canal and so on and so forth? Could there be further attacks on infrastructure within the Gulf region? So severity is definitely one factor. But the second factor that's extremely important is actually duration, timing. How long does this go on for? We believe that if this whole conflict were resolved today, the world will recover, probably recover quickly as well. And yes, damage has been caused, and there are already impacts on farming and agriculture and food security and so on. But give it another 6 months, 1 year, there will be recovery. But if this continues to 6 months and beyond, we could actually be seeing more fundamental changes and more structural changes in energy dynamics. However, one of the things that we are seeing is, as I said, demand destruction for natural gas, and I'm using that, probably less so for oil. And we've seen countries that are switching back to coal. We've seen countries that are switching to other forms of energy, biomass, and so on and so forth. How long this continues will determine also whether recovery from that is possible. We saw this happen in 2022 when the Ukrainian conflict came up. There was recovery in most countries, from that, but this is going to be something else that we need to watch quite carefully. There is a push by various wealthy nations towards accelerating renewables as well. And that's another one that, again, depending on how long this continues, could become a more structural thing. But it's something that we continue to watch. So looking forward, in the medium term, the previously anticipated oversupply. So again, just to give some context, 2026 was going to be a year that we were going to flip from a very tight natural gas market, LNG in particular, into oversupply. And it was expected that by the end of this year and into next year, there will actually be a glut of LNG. Clearly, this conflict has done something to that. And it's not yet clear whether it's just a delay or what that change is going to be, or whether, in fact, that glut will ever come because of what is happening, again, depending on how long this continues. What we know for sure is that that oversupply is being reshaped in some way. The medium-term response is likely to be shaped by, as I said, the severity and the duration of the crisis, but investment timelines are also being reassessed, with some FIDs being deferred as companies are prioritizing risk mitigation over rapid expansion. Capital costs are beginning to rise, with expected inflation hikes as global financiers adopt more cautious approaches. And while this is not universal, but we are beginning to see some pockets of this behavior. And this likely slowdown in project execution may then lead the market to a longer tightness than was previously expected, pushing the era of natural gas glut even further into the future, if at all. Now, for Africa, this is the second time in just a few years that the resilience of the continent's energy sector is being put under severe stress. Recent developments have once again highlighted that Africa remains a vulnerable region to global shocks in energy markets. However, the sort of impact that we are seeing already and will likely continue to see is actually asymmetrical across the continent. For gas importing nations, the transmission mechanism of the shock goes through rising energy and food prices, which are intensifying pressures on affordability, electricity tariffs, and fiscal balances. For many countries, this is not simply a market fluctuation. It is a direct challenge to economic stability and social welfare. The secondary shortage of fertilizer from the Middle East could cause delayed effects on food security and on the livelihood of farmers across Africa. Conversely, for Africa's gas exporting countries, the situation is more nuanced. On the one hand, tighter global gas markets and heightened competition for flexible supply are creating opportunities. Export revenues may improve, bargaining power may strengthen, and African producers are increasingly recognized as being more strategic suppliers in a more fragmented and uncertain global energy landscape. And so, like most crises, they always come with both threats as well as opportunities. But these opportunities carry risks. Price volatility, logistics disruptions, and growing pressures to accelerate investment in infrastructure makes the environment a critical test of execution capacity, requiring timely project delivery to capture shifting global demand. Sadly, while some African producing countries have excess capacity in both LNG plants and export pipelines, and there are many examples. If you look across a number of the countries that have LNG plants in Africa, the majority of them, if not all, are not full, are not producing at full capacity. If you look at the export pipelines into Europe, whether it is the ones from Algeria, from Libya, from any of the countries, none of them is full. Normally, in a situation of crisis, this is an opportunity. Fill it up. Seize the market. Unfortunately, we're missing out on that opportunity because we don't have the upstream molecules to fill the infrastructure, neither on the LNG side nor on the pipeline side. The upstream production is just not there. The reserves are there. The production is not there. So the ability, therefore, to capture the market, whether it is the European market or the Asian demand in the short term, is therefore being missed. And this is a missed opportunity which is actually being seized by North America, principally the US and Canada. Against this backdrop, Africa's energy security is not a choice. It is a precondition to sustainable development. Africa's vast natural gas resources can become a powerful engine of growth, industrialization, and poverty reduction, but only if supported by infrastructure investment, stronger regional integration, and effective project de-risking. At a time of rapid population growth and an emerging demographic dividend, that's a whole other discussion. If you look at the demographics that Africa is, this phase that Africa is entering into over the next 25 to 30 years, it's a huge opportunity. But the central challenge is not merely to absorb shocks, but to build a resilient energy system capable of translating resource wealth into long-term development. Distinguished guests, to fully realize these potentials, there are several priority areas that require focused attention. First, come back to my earlier point, the upstream. There has to be concerted and consistent investment in the upstream. We looked globally over the next 30 years to about 2055 and assessed how much investment was needed globally around the world in order to meet the projected demand growth in natural gas that's expected. And it's thought that somewhere between 11 and 12 trillion dollars would be needed. But what was more interesting is that 95% of that money is going to go into the upstream. That's where the investment is needed. And with the examples I gave earlier, that's where we have fallen short today. That is why we're not able to capture the opportunity that this current crisis offers to Africa today, because the molecules are not there. They're still in the ground. The reserves are there. And therefore, there's currently a material gap between capacity or reserves and actual production. And this requires focused investment. Second, interconnected gas pipelines are vital platforms for the continent's natural gas integration. By linking cross-border supply with rapidly rising demand, intra-African trade is enabled. Industrial clusters are supported, integrated markets are created, and regional energy security can be assured. This interconnection has to be looked at both at a domestic level, in country, at a regional level, cross borders within Africa, and then also in terms of exports beyond Africa. The third point, the development of value-added gas processing and petrochemical plants such as urea, plastics, and so on and so forth on the continent, and I'm saying doing it in Africa, is essential to retain critically needed capital at home. We cannot continue to export, and I'll put it in inverted commas, raw natural gas, only to then import the finished products. This is what we have done in the past with crude oil. Let's not repeat it with natural gas. Let's add the value on the continent. Fourth, expanding cross-border LPG, so liquefied petroleum gas, infrastructure is equally important. This includes production and import hubs, storage facilities, and both piped and virtual distribution systems. LPG plays a transformative role in clean cooking and power, with direct implications for public health, gender equity, and environmental sustainability. This is something that I believe that Africa also needs to focus on. Fifth, natural gas complements renewables by providing essential flexibility and reliability. As Africa expands solar and wind power, gas stabilizes grids and ensures continuous supply, balancing the inherent intermittency of variable renewable energies. Hence, natural gas does not compete with, but instead complements renewables. Both are needed. And sixth, LNG into power. More broadly, I would have said natural gas into power, but there are LNG to power solutions that are present today which offer a compelling option for rapidly growing coastal demand centers. These integrated systems can be deployed relatively quickly and provide reliable baseload power to support industrial zones, major cities, and port infrastructure. When we talk about LNG, it's not just the big mega projects. We're talking floating LNG. We're talking about being able to tap into resources that would not normally meet the threshold for major developments. We're talking about flexibility that floating LNG also provides. That's an opportunity. And seventh, harmonizing regulatory and fiscal frameworks is imperative to de-risk long-term infrastructure. African nations must align their regulations to foster regional development in the interest of both producing and importing countries. This coordination ensures that cross-border infrastructure projects remain commercially viable throughout their multi-decade lifespans and can hence raise the requisite financing. In conclusion, the current geopolitical environment has once again exposed the vulnerabilities, but also the opportunities within Africa's energy system. The central question is not whether Africa has the resources. It does. The real question is whether these resources can be transformed into resilient, integrated, and well-functioning energy systems that anchor long-term African development and support global energy needs, especially in times of crisis. Natural gas, in this regard, is not just part of the solution, it is a critical enabler of a more secure, more resilient, and more prosperous energy future for the continent. Once again, thank you very much for the invitation.